Are all the gains priced in for this infrastructure deal, even though we only have a framework and the final deal hasn't been made just yet?
Yeah, I don't know that it's all priced in just yet, but I think the reality is we've had a nice run when you look at the start of the year to where a lot of these names are, whether that's a U.S. Steel or you mentioned a couple of the other names, but they're at Freeport Mac, all these different names within this space that you'd expect would be moving to the upside. I think the reality is they've made this move, a pretty rapid move earlier in the year. They've had a little bit of a fade of late, but I think we're getting ready to accelerate on the next level. And I think that this is a great example of 2 steps forward, 1 step back. And I think that's exactly where we find ourselves right now. I think these companies, a lot of folks were probably sitting there, Frank, trying to figure out, are they ever going to agree to any kind of a deal? Is there any kind of bipartisanship going on right now? And it looks like there is. We've got this deal, and I think we're all pretty excited about the possibilities of what this might be, not just in the deal itself, but also, quite honestly, in a lot of these various stocks, I think that are specifically a part of what will be a pretty monstrous deal when it's all said and done.
You know, we technically have a deal, I guess, but it's more of a framework. Some of those final wrinkles being ironed out, and a lot of that human infrastructure taken out of the deal. And I want to turn to you, Brenda. You own Waste Management and Sherwin-Williams, 2 stocks that were potentially beneficiaries of that human infrastructure. Waste Management only up fractionally today, and Sherwin-Williams actually down yesterday. Do we need to rethink what these infrastructure stocks really are?
I don't think so. You know, I think when we look at many of the companies within this sector, they're almost all beneficiaries of an improving economic backdrop. And especially with something like a Sherwin-Williams, where, you know, there is a very heavy component there on the retail side and on the contractor side, both of which should continue to be healthy. And on the waste management front, you know, to the extent that we continue to have more economic growth, there's going to be more waste to deal with. And to the extent that there are more demand for materials and that those end up in landfills, that just creates more value for those that are in that industry to be able to realize.
Jim, turn to you. Similar question. One of your holdings, Cleveland-Cliffs, actually down about 2% today. Surprised at all?
No. I mean, first off, let's call Cleveland-Cliffs what it is, which is a workhorse thoroughbred hybrid. I mean, this thing is a killer. So if it's down today, let's not forget where it's been and how far it's come. It's going to 30 in the next 6 to 9 months. So let's not worry about Cleveland-Cliffs. And the reason not to worry is not just because of infrastructure, but because of other forces in play, like supply chain onshoring. So think about all those plants like Taiwan Semi's $12 billion fab plant that they're building in Arizona. That supply chain onshoring is going to continue, and that's going to place heavy demand on steel manufacturers, transports, Caterpillar, Deere, all of those things. And beyond that, we're in the early stages of an economic expansion where profits are growing and people have more money in their pocket. And what do they do when they have more profits and more money in their pockets? They build things, and they use industrials to build it, and they use steel and concrete and all the things we're talking about. So it isn't just infrastructure. This is a perfect time to be investing in this sector, industrials.